So what I normally tend to do is that I'm a price action trader. I've been on the trading floor numerous times in terms of as an observer. So I observe price based on where institutions are actually parking their money. So what I normally tend to do first is I look at any up and coming high impact news. I know that tomorrow there's going to have ISM manufacturing PMI and JOLTS job opening. So anything that's high impact news that would affect price.
I wanted to bring you into the conversation because I wanted to find out from you what levels you said a minute ago. You said to me, "I have it written down already. I know what levels I'm trading." I'm curious, what levels are you trading now, and also whether you're also a daily chart trader or you're more of a short-term trader. Because I didn't get a chance to find out your preference, time frames, and type of trades that you do.
Yeah, my preference is daily time frame. I'm more of a trend follower than anything. Sometimes I do swing trading, but anything less than 1 hour, I don't actually touch it that much unless I'm trading basically from a momentum perspective based on news. So that's basically my style. Yeah.
Okay, great. So maybe you can walk us through what you think is looking good for you as far as levels right now that are kind of tradable level.
So what I normally tend to do is that I'm a price action trader. I've been on the trading floor numerous times in terms of as an observer. So I observe price based on where institutions are actually parking their money. So what I normally tend to do first is I look at any up and coming high impact news. I know that tomorrow there's going to have ISM manufacturing PMI and JOLTS job opening. So anything that's high impact news that would affect price. And I believe Jamie already said that on Friday we have NFP, non-farm payroll, and unemployment rate. So all those things I basically look at, and I look at the percentages. Like say, for example, PMI, they're forecasting to 54.4, but I know that this number's already been leaked out even before it goes in. So what I tend to do is that, well, great, there's going to be some high impact news tomorrow. So what will affect from my methodology would be I look at the macro fundamentals first, and I'm like Jamie said, I look at the dollar index as the central hub. I believe the dollar index is a very important indicator in terms from a currency point of view, and so I also look at the dollar index, and I'm a supply demand trader, very similar. That's my levels. So everybody calls it differently. People will call it support and resistance. I'm a supply and demand, very simple. So I know that the price reach a really good demand level, which is also the 50th percentile of the first impulse move of the actual trend itself.
Okay.
So it rebounded from there. There's a lot of confluence within that area around that 101, 103. So actually I was long the euro since actually broke out particular trends. So the way I draw trends is very simple, very objective, because those highs and lows are institutional price points. It cannot be you, it cannot be me. It could be someone huge that would be able to support the price at a level demand or a resistance point of view where someone is selling at a particular price point. So yesterday, which is at the end of today, it created a new higher high and higher low. What does it simply mean? Someone was willing to buy higher compared to the previous high point. So from an institutional point of view, and it created a higher low. So that, in my own perspective, since still in an uptrend, the probability that the dollar index is going to go to the upside is more than likely since the correction has already been established.
Got it.
So very similar. I already know basically from there, out of the major currencies, which one has the highest probability based on geometric weighted mean, which is the euro US dollar. So from a geometric weighted mean, euro.
I'm sorry. I just want to stop you right there so people can follow us a little bit more. The reason why, after you're looking at the dollar index, the reason why you think euro has the highest probability is because euro is the most weighted in the dollar index. Is that so? It's
correct.
Reflecting that. Okay, very good.
Yeah. So because after 1973, right, where gold has been backed, basically by the dollar has been backed by gold, and all of a sudden it's gone. So the question is, how can the dollar be value weighted against the major currencies? And then before you have your Deutschmarks, but now became the euro, that is about 57%, 57.1% in terms of geometric weighted mean of the dollar index.
Right.
So the euro will always have the inverse relationship with the major currency, which is the US dollar.
Understood.
And so from a perfect world, that if the dollar index is bullish, then the rest should be bearish to a certain degree, like say oil. So if I'll be trading the Canadian dollar, for example, then I also need to look at oil, because oil is a major commodity of the loonie. And then from there, it should be an inverse relationship, because if people have to buy oil, they need the US dollar. Likewise, for gold, that should be on the opposite side, which is on the opposite side. Copper is also the same, that if I'm trading the Aussie dollar, then it should be on the opposite side. And within the dollar index, then the S&P should be pointing to the downside, which it did yesterday, because the dollar index was bullish, based on a perfect world. But if not, then there's some form of divergence. And that's also what I'm looking for, that if there's some form of divergence, then one has to be leading, one has to be lagging. The question is now is which one's which. So those are my indicators that I basically look for. And then from a longer perspective, I also look at the commitment of traders. So this is the commitment of traders for the dollar index, knowing where large institutions or large speculators are parking their money. So if they're bullish or bearish, now here you can see from the green line, this is where large institutions are actually long the dollar index. Okay, so from this point of view, it's very easy now for me to know which one's which. So I'm going to be shorting the euro from this point. Number one, from a methodological perspective, in terms of where the trend is, it's a downtrend. Number two, the price reached a level of supply where no one was willing to go beyond 108. And from, you see within these clusters over here, at one point they wanted to push it to the upside, but they didn't want to. So this is from the martial arts perspective. You need to go, if you're going long, then you're in attack mode. If you're going short, you're in defensive mode. But if you're in attack mode, then what's your defense? If you're in defensive mode, then what's your offense? So for me, it is a low risk, high probability, because number one, the trend is down, where the current is pointing to the downside. Your risk is very minimal, and your probability of winning is very high, where you also have the risk to reward to risk ratio is actually, if you're dealing with the reward to risk, maybe minimum of 2 to 1 right here.
So I'm curious, if you're structuring this trade, you're in at market around 32. How much of a stop do you give it at this point?
So this is just my own way of doing things. I always look at the high right there, 107.86.8. I will always add plus 15 pips to the upside, based from my own research. I will never get stopped out.